Well, howdy there, folks. Welcome into today's video. Boy, do we have a lot to get into in this one here today. I want to talk about some important things that are going to happen in the market over the next few days that I want to explain kind of what's going on, what I'm kind of keeping my eye on and whatnot. I want to talk about a few specific stocks that are reporting earnings over the next few days here that I'm looking at, and a few things like that. But at the top of this video, I really want to talk about recession, okay? We've been hearing about recession since about December of 2021. And as 2022 ticked along, you heard more and more about recession. And we actually saw Google Trends go to the highest that we have seen in the history of Google Trends for the term recession, right? And here we are now, only a week and a half away from April of 2023, still hearing about recession. I want to tell you what I'm seeing in the real world. As somebody that went to the real world, let's call it, and left the internet universe yesterday, and just kind of show you what I saw personally out there, okay? And then I want to share some perspective around this recession talk, because the can kind of keeps getting pushed and pushed and pushed, and we got to talk about that, okay? And then we'll get into the whole market stuff, stocks, all that good stuff. Just want to talk about recession-related topics at the start. Hope you guys enjoy this. Always, thanks so much for joining me. If you're looking to apply to join my private stock group, private wealth group, they'll be in the description area if you're looking to join us in there, okay? So yesterday, I went to a ton of different places, okay? Had some family in town. They wanted to go to a bunch of different places. So one of the places they wanted to go was the Planet, okay? So got to go to the Planet. I got to say, I haven't seen the Planet that busy in a long time, okay? In a long time. That place was out of control yesterday. I was like, holy smokes, is this back to the stimulus money days? Like, I hadn't seen it that busy since probably the 2021 days of stimulus money and whatnot. It was great to see. And I think we were there maybe 4 o'clock in the afternoon. Might even have the time, 5 o'clock, right? Just the place was slammed. Parking lot full, Ubers and taxis coming in and out, dropping people off, picking people up. It was busy, okay? And so, yeah, take that for what it is. Went to the Planet, okay? Went to a taco place to get food. And that place was a zoo. It's called the Taco Stand, by the way. Good food there. It's a place here in Vegas, right? Probably 5 minutes from the Strip or so. That place was like a line out the place. I was like, holy smoke, this is no joke, okay? Then I drove the entire Las Vegas Strip, okay? I'm talking all the way from Fremont Street all the way past Mandalay Bay. I drove the whole Strip, all the way from the north end to the south end, okay? And I can tell you what I saw. What I saw was craziness, okay? It's the Las Vegas Strip. No, but in all seriousness, as busy as I've ever seen it. As busy as I've ever seen it on the Strip. I mean, it was jam-packed. You hear all this talk about recession. Oh, people have no money. No. I can tell you, people still got money, okay? I don't know where it comes from, but people got plenty, and I mean plenty of money. That Strip was packed. I would imagine most of the hotels' occupancy was pretty close to max, okay? I would say most of these hotels are probably 80% plus. I think 90% plus for many of the big dogs, because I'm telling you, just based upon the sheer volume that I saw of people walking around the Strip, it was immense, okay? There was no shortage of, let's call it foot traffic around the Las Vegas Strip. It was insane, okay? I was like, let me take a peek at room rates and kind of what's going on there. So I just typed in for next weekend, let's say, for instance, right? Just to see what it would cost me for a room for next weekend. Well, you're looking at $540 plus a night at the Wynn. Aria, you're looking at almost $500 a night. This is just for, by the way, this is for the most basic room. The most basic room is that price, okay? And obviously, if you want a more advanced room, suites, anything like that, it's going to cost you way. This is for the cheapest room. Cheapest room at the Wynn, $541 for next weekend. Aria, $469, right? Cosmopolitan, $653 for the most basic room for next weekend. Insane, right? Bellagio, $465. Red Rock and Summerlin, almost $300 for a room at Red Rock? At Red Rock? What? Holy smokes, that's no joke. Is Encore, $541 just for a basic room at Encore, right? And so nonetheless, folks, I can tell you, it is not cheap to come to Vegas, and yet people from all over the world, all over the United States, are still flooding to Vegas every single week, every single weekend. It's as busy as I've ever seen it down there, man. It looked like they got some sort of crane convention going on this upcoming week, because there's all these cranes all over the place. So that was that, okay? So then, since we had some family in town, they wanted to go out and have some drinks and whatnot, late night. So I looked up this place in Summerlin. We'd never been there before. It was called Lanita or something like that, or Lanetta, and a Mexican place in Summerlin, right? And it was past 10 o'clock at night, but I saw this place was open till 1. I thought it wouldn't be that busy, considering it's so late night and it's Summerland. It's not like this is anywhere close to a strip or anything like that, right? This place was a zoo. We barely got a table. We got this table right here. This is the only table they had that was available. I was like, okay, yeah, I guess people still got a lot of money, and this is kind of an upscale place. The drinks were not cheap. They weren't cheap. Let's just put it that way, okay? A few nights ago on Thursday night, I went with my neighbor out to North Italia, and I can tell you that place, we went, it was like, this is 8 o'clock or so on a Thursday night. We probably got there around 8 or so. And I can tell you, we got pretty much the only table available, which was outdoors. And that place was just jam-packed on a Thursday night at 8 o'clock. At 8 o'clock. And so, nonetheless, and by the way, if you're wondering why I was at North Italia, why I wanted to go there, I specifically wanted to go there because I just might have bought Cheesecake Factory stock for the first time in a long time here recently. And if you don't know, Cheesecake Factory owns North Italia. They also own another restaurant concept that basically tries out a bunch of other restaurant concepts to see which ones click, and then they expand those around the United States of America once those actually click. So, I've been eating there a few times recently, but yeah, nonetheless, folks, busy out there, right? And we have a very interesting dynamic going on, okay? So Michigan consumer sentiment here has continued to improve from where it bottomed back in the summer. Now, the issue I have is we had a recession. We had a recession back around summertime of 2022. The government didn't call it a recession, but it was a recession. Let's be very clear about that. The only thing you didn't get in that recession was unemployment. Unemployment was low. It was under 4%. So therefore, the government decided not to call it a recession, even though every other indicator you could look at was basically screaming a recession, right? Including consumer sentiment, which who buys all the stuff? Oh, it's consumers. So if consumers are telling you it's bad, it's probably bad, right? And nonetheless, the consumer sentiment was the lowest we've ever seen it in the history of the Michigan Consumer Sentiment Survey. The lowest, okay? Like, we've never seen it that bad. That's how bad it got, right? And so if consumers are telling you that it's that bad, right? Literally the worst ever. Likely you're in a recessionary scenario, but they chose not to call it a recession. And I think this is a big problem we have in the market now at this point in time, that because we didn't call it a recession, if we would have just called it a recession and then said, oh, now we got out of the recession, we could have moved on. But because they chose not to call it a recession for whatever reason, okay, and you can draw your own conclusions there, they chose not to call it a recession. Now we just have to keep hearing about, oh, it's coming, instead of just being like, oh, we are in the recession, we recovered from the recession, now we're on the upward trend, right? The good thing about, obviously the 08-09 situation is they called it an actual recession, right? They called it a recession, it got dedicated as a recession. They didn't say, well, this segment over here isn't facing a recession, so therefore we're not going to call it a recession. They looked at it and they said, hey, this fits recession, this is recession, okay? And so nonetheless, folks, I think that's very important because now you got consumers basically feeling better and better out there, which makes getting in an actual recession a harder thing, right? And so what we've seen now at this point in time was, oh, we're going to have a recession mid-2022, which we actually did, by the way, but they didn't call it that, okay? Then since they didn't call it that, then people pushed the can down. They said, oh, it'll happen in the third quarter of 2022. Then it didn't happen in the third quarter of 2022, so then they pushed the can down the road more, and they said, oh, just wait till the fourth quarter of 2022. No one's going to have any money. We're going to see big recession there, okay? Then when it didn't happen there, now people were saying, okay, first half of 2023, that's when it's going to be awful, massive recession. That's when you're going to see it, okay? Now it seems like it's getting harder and harder to see that. So now what they're doing is they're pushing it to the back half of 2023. And they're saying, well, just wait. The back half of 2023 is when we're going to see a recession, okay? Guess what's going to happen if we don't get a recession still in the back half of 2023? Then they're going to say the first half of 2024. Then if it doesn't happen the first half of 2024, they're going to say the second half of 2024. Then if it doesn't happen in the second half of 2024, they're going to say it's going to happen in the first half of 2025. And you're just going to keep kicking the can down the road until finally it ends up eventually happening and the government actually calls it that, which nowadays, it's whatever, I guess the truth is in the eye of the beholder. Now at this point in time when it comes to, facts, but it is what it is. So anyways, folks, this is a situation we're dealing with now at this point in time. And it's just going to get harder and harder and harder if you keep having to push it out, because at some point in time, people just kind of give up on the whole scenario, right? Now, what also is going to, this is really important, okay? If you've never seen this before, you might have never seen this before unless you're super into economics and the markets and those sorts of things, okay? What you're looking at is basically what could be referred to as real wages, okay? And what we actually witnessed was, guess what? When the recession was going on, when we actually had a recession, but they chose not to call it a recession because one data point wasn't recessionary, so they're like, oh, since that one thing isn't, we're not going to call it a recession. What did we see? Real wages dropped the most significant we've almost ever seen. Real wages drop. I mean, that was an insane drop there in a 2-year span, right? Bottoming out in Q2 of 2022 when a recession was going on, but the government chose not to call it a recession, right? Since then, real wages have started to improve. I don't think that's going to stop. I think real wages are going to continue to improve quarter after quarter after quarter for potentially at least the next year, if not several years to go in the future. But we had a bad downtick there, a horrible downtick, I should call it, right? And like I said, when real wages of folks keep going down and down and down, that's a recession, right? Just because one data point is not lining up to your criteria of recession does not mean you're not in a recession, okay? If consumers are telling you it's the worst they've ever seen it, and if real wages are declining at a rapid clip like that, right? That's a damn recession. I hate to break it to people. That's a freaking recession, okay? Because who's buying all the iPhones? Who's buying all the homes? Who's buying all the cars? That's consumers. And when consumers' real wages are getting destroyed and their sentiment's getting destroyed, it's when you know you're in trouble. So now sentiment has started to improve. Real wages has started to improve, right? Hopefully we continue to see that happen, and continue to improve in terms of sentiment and real wages for the next, hopefully, several years. It's not a guarantee, right? But hopefully we see that. And then you're up and away, right? But nonetheless, folks, that's what happens when you have a situation like this. And my thing is, we got unlimited money in this world, right? The Fed's got unlimited money, and supposedly the Saudis have unlimited money. Look at this, okay? I got an ad for this. The Saudis, not only do they have money to do these crazy projects, but they have money to spend on advertising to me just so I can look at these projects, right? Saudi Arabia, latest sci-fi project, is a cube the size of 20 Empire State Buildings. They're building this cube-like building structure. I don't know if it's supposed to be a hotel or what the heck it's supposed to be. The size of 20 Empire State Buildings. How insane and ridiculous is that? Oh my gosh, okay? Not only that, they're building this thing. I don't know if you guys have seen this, but it's basically going to be like this crazy city that is like basically on its side. Like it's going to be like a million skyscrapers put together, but on their side in Saudi Arabia. I mean, they're just building these crazy projects. And the only thing I'll say, you look at all these projects they got over there. And to that I say, this is great. This is great. Because the way I think about it is if the aliens do come, okay, let's be honest, if the aliens do come, they're going to the Middle East first, and they're going to Saudi Arabia because, damn it, they got all the coolest buildings over there, all the most epic buildings they're going to have now at this point in time. So the aliens are going to think like that's the place to attack first. So now at this point in time, I think, here in the States, we might be safe for a little bit. Europe, you guys are definitely safe, I can tell you that. They're not coming to Europe, okay? That's going to be a back page story for them, okay? Though you guys will get it last once the aliens come, okay? Alrighty, so now let's talk about the markets a little bit, some stocks specifically, and get into a few things, okay? So the Fed's supposed to increase interest rates 0.25%, right? 25 basis points this upcoming week. I think there's a decent probability of that. I mean, if you go back a couple of weeks ago, it was definitely looking like 50 basis points, but now because of obviously the banking crisis and whatnot, it should be 25 basis points, probably realistic. It looks like a save the face move, right? A lot of people are saying they shouldn't even do a raise, right? This might be one of those times where there's a difference between what they should do and what I think they will do. They definitely should not tighten policy, said the chief economist at Moody's. Moody's? Oh my gosh. Is that the same Moody's that had an A rating on SVB a couple of weeks ago before they went under? Is that the same Moody's there? But nonetheless, folks, that's what you're likely looking at. 25 basis points, or if they raise 25 basis points or 0 basis points, it makes basically no difference on the economy now at this point in time. It just doesn't. I mean, when they were doing all those crazy hikes, obviously 2022 in the beginning of this year, that's a whole different story. But now at this point in time, whether they do 0 or 25, it doesn't really matter. The likely probability is the Fed's done raising rates now at this point in time. And they could be done for a long time, to be quite frank. I mean, it's very possible. I don't think enough people are talking about this. This is very possible that this is the last time the Fed raises rates for potentially years to go in the future. And I think much of that really depends on the economy. If the whole more recessionary scenario finally plays out at some point in time, right, and they actually call it one and all that stuff happens, right, then the Fed's going to be cutting rates, and then they'll be cutting rates for a long time to go in the future, right? And even if the economy stays, let's call it in a decent place and it continues to improve from here, I don't think it's going to be super realistic for the Fed to raise rates anymore. If anything, they'll keep rates the same, or even if the economy started to improve a little bit, I think you could always find something negative in the economy to look at. And so the Fed's going to have a reason to cut rates if they want to cut rates, even if the economy stays good, because there'll always going to be some economic indicator that looks bad. They'll be like, oh, this is bad. But they'll do that once, obviously, inflation continues to come down, and then hopefully gets under the threes at some point in time. So, yeah, I think that's an important factor there that is at play, and I don't think enough people are thinking about it from the perspective of the Fed could be potentially done raising rates for years to go in the future here, okay? Now, we've got a few important companies reporting earnings this week, right? One of them is a stock I personally own, Foot Locker stock, FL, okay? They're reporting before the market opens on Monday. I'm personally hoping the stock goes down. It's a position I have that's a pretty decent sized position in the dividend only account, right? Which that account is probably $170,000 or $180,000 account, right? This is $31,000 of that, so it's a really good sized position for that particular portfolio, right? We're up 59% on it. This does not include all the dividends this stock throws me off every single 3 months, right? Every 3 months I get thrown off dividend money from this company. So that doesn't even include all that money, right? But I'm very happy with the stock. I'm actually hoping it goes down. I want to build the position bigger, to be quite frank. I mean, the way I think about it, the yield right now, 3.9%. I would love to get this back into a yield in the 4s in terms of what I'm buying. It's a super low PE ratio. My hope is it goes down. Regardless if it goes down or up, I could continue to be a buyer of the stock, because at the end of the day, it's still a steal deal. Check out the trailing 12-month P, check out the forward P, check out the stability in the business model over time. Dividends, obviously look at their dividend history. I really like Foot Locker, right? But the thing that's interesting here is 2022, right? Wall Street was looking for a reason to sell growth stocks. Any reason. Give me a reason, we'll sell it, okay? But now at this point in time, 2023 is more of a year where Wall Street's looking for any reason to sell these dividend stocks, right? Because obviously Treasury is still yielding very high. They've been yielding very high. And so it seems like Wall Street's just in a position where they're like, give me a reason, please, to sell out of my dividend stocks so I can put that in Treasuries. And so nonetheless, if Foot Locker, in order for the stock to go up after earnings, I think they really have to come in and crush it, my personal opinion. Other than that, the stock could potentially go down because, like I said, they'll just look at like one bad thing and then they'll send the stock down. So that's my hope that happens there. But if the company comes in and crushes numbers, like it's going nowhere but up if that was the scenario in regards to that, right? 3 other stocks I'm keeping my eye on this week. Nike, which is what we'll talk about in just a moment. Chewy and KB Home. And I'm keeping my eye on all 3 of these for different reasons, okay? Nike, I'm keeping my eye on it because it is on my list. I have a list of stocks that are potential buys for me for the second quarter of 2023 here, which we're going to get into here in the next week and a half roughly, right? And Nike is one of those stocks. I've always wanted to own Nike, never been able to do it. And the thing with me and Nike is I just want it for cheaper, to be quite frank. I'm really looking for a forward P under 25 on this company. So if we can push down there, I'm hoping the stock sells off, then I could potentially add a position. It is a dividend payer. It's a very small yield on it, 1 point something percent, compared to obviously a Foot Locker's a 3 or 4% yield. But yeah, my hope is that baby goes down and I can acquire some shares in the second quarter of this year for that one, right? Chewy's one I'm keeping an eye on. Chewy's interesting. If you have a pet, you've probably used Chewy in the past, or you currently use Chewy, or you've considered it at least, okay? And a huge e-commerce platform for pets. It's kind of like the one-stop shop if you got a pet. But there's something interesting happening here, which is why I'm keeping an eye on Chewy, is this company's about to flip to major profitability here, okay? It looks like it's going to be on the verge of full year profitability in 2023. Maybe they even eke out a small profit if they actually have a really good year execution-wise. And then obviously from there, it should be up and away for their EPS. And so usually when you see a company make a move like that and they flip to that profitability state, you many times see a big move up in the stock price for that particular company, right? And so if I look at Chewy's last 5 years, I mean, this company's been in kind of a perfect scenario in terms of bringing their net income more and more in line. I mean, you look at 2018 as disaster, right? $700 million loss, and then 268. 252, 92 million, 74 million. And this year should be, 2023 should be around break even, it looks like. Somewhere around there roughly, a very small loss or a very small profit. And then obviously they should start increasing. So it's an interesting company. I'm gonna have to do more digging there. I'm really trying to figure out, is the valuation worth it? That's a big thing, because you many times see these, a huge move for a stock like this over the next couple of years, but I'm really trying to figure out, is a valuation worth it, or is it too much priced into it? So that's what I'm trying to do some work on there, okay? KB Homes, going to keep an eye on their earnings specifically. I keep an eye on all these home builders right now. And the main reason I'm keeping an eye on all the home builders, Toll Brothers, Lennar, KB, all these guys, okay, D.R. Horton. The reason I am is because I want to see what's going on with their backlogs, these companies. The backlogs are extremely important. Backlog essentially meaning all the homes that need to be built for these companies, okay? And if you're talking about something that definitely could hurt the economy, it's if these companies' backlogs dry up by the end of this year, going into 2024, that could definitely hurt the economy in a pretty substantial way, because home building is a huge component of our overall economy, okay? So what we need to see, if you want to talk about keeping the economy in a good place, is we need to see these companies, in terms of their backlogs, we need to see them starting to grow again within the next 2 quarters specifically, okay? We need to start seeing that. If we start seeing their backlogs start to tick up again, that would be great news for the overall economy. And that could likely signal somewhat of a bottomish for the housing market at that particular time. I don't think we're there yet, but it's a possibility we could be there at some point in time. So that's why I'm keeping a close eye on KB Homes, Toll Brothers, all those companies, and just kind of seeing it. Obviously, they all cater to different demographics and specifically different economic classes. Let's just call it that, right? Toll Brothers is going to sell to the folks that are the highest end middle class, or even let's call it wealthy folks, right? A KB Homes is going to be more middle class. A Lennar is going to be kind of a little more maybe upper middle class. A D.R. Horton is going to be like the lowest end of housing when it comes to obviously let's call it all the public home builders. Like if you look at the average D.R. Horton price of a home they sell, it's the cheapest of any of the public home builders, right? So you can actually go through the different home builders and see like where housing strength is versus housing weakness. And if anything in this housing market right now, if there is any strength, it's likely at the lowest end of the housing market right now, because obviously the folks that are more sophisticated haven't really been looking to put money to work in housing right now, being that interest rates are so high, being that there's so much uncertainty out there, right? They're kind of like in a position where it's like, I'm not in a rush to go buy a new home right now. And so I think that's something important. So yeah, all the home builders, definitely ones you want to keep your eye on. But like I said, specifically keep an eye on new orders coming in backlog. That's what's really important for all those folks, okay? I made my new moves in the Patreon portfolio on a Friday. So if you want to see those moves, check us out in Patreon. You can also, if you enjoy the channel and you want to support the channel, you can do so on Patreon. It's $10 and you get access to obviously see that portfolio, see the moves I'm making, and get to support the channel all in one. That'll be pinned comment down there. I appreciate everybody. Much love as always, and have a great day.